On to this story now. The Sanlam Group has today reported a strong financial performance for the first half of 2023. The group says its earnings pattern is also back on track after a series of what management has described as a 1-in-100-year events between 2020 to 2022. The group also says its strategy to fortify its position in South Africa is working, with the group's key earnings metric, cash net results from financial services, increasing by 30% in the first half of 2023. Total new business volumes increased by 19% to 191 billion rands, driven largely by strong investment business sales. To talk more about the group's performance, we're joined by Sanlam CFO Abigail Mukhuba. Abigail, thank you very much, as always, for your time. Let's start with the issue of the resilience of the Sanlam Group. A lot of people and a lot of companies continue to look back to what COVID-19 did to their performance and the economic landscape, as well as the Ukraine-Russia war. How do you characterize the past 2 years, seeing that you are saying you are back to the normal performance financially?
Thanks, Tolani. I think over the past 2 years, Sanlam has been hit by several what we call 1-in-25 or 1-in-100-year type of events that seem to be coming back to back on us. So we've also experienced a very challenging time along with our clients and the rest of the world, if one can put it that way. But overall, our resilience and our prudence and preparedness for tough times from a Sanlam perspective has seen us weather the storm, what we refer to as a perfect storm. It has seen us weather the period over the last 2 years, not unscathed, but even much more stronger and more resilient, I suppose, than when we actually went in. We were prepared for it. It was not fun, but we've come out even more stronger. And a lot of it obviously had to do with the prudence that Sanlam usually has or operates under in as far as our results are concerned, and just the way that we do business.
Abigail, how has Sanlam done when it comes to the Pan-African front? Because you've just announced a couple of days ago what is a huge transaction with Allianz to take insurance to the rest of Africa and your offerings.
Our Pan-Africa business has done exceptionally well as well. They were also under severe adverse events in terms of, again, as you referred to earlier, COVID, the supply chain disruptions that impacted inflation for all of us. So the Pan-Africa business did not necessarily have it any easier. However, during this period, they've performed very well. Their volumes are up, their underwriting margins are up. Again, talking to the resilience of the business and the leadership that that business is under. But overall, I think also the quality of the business that we get involved in. That management team has spent a lot of time over the last few years making sure that they concentrate on good quality business. And making sure that we build strong relationships with the partners that we have on the ground in the different countries where we operate, so that you actually operate from a basis of understanding your client's needs at ground level. And I think that has held us, it's given us quite a strong base from which to work over the period. So the Pan-Africa business has done very well across all the metrics. You were talking about cash earnings. They've done very well on value of new business as well. They experienced some challenges in the health business, but overall, even that's, we're starting to see a turnaround.
Abigail, as you know, most households, when they are under financial strain, they will look for pockets to actually save on spending, and one of the first things to go would be insurance. How are consumers, when you look at how they have transacted with you in this 6-month period, how are consumers doing? Because judging by what Sanlam CEO said this morning, there is a lot of confidence in that the households will return to normality financially sometime next year.
So I think it's twofold. With the advent of COVID, one of the things that we appreciated was that our clientele bases have realized the value of having insurance cover, particularly life cover, and funeral cover as an example. Because of that, you're seeing that there's not as much a drive from people to want to cut out what we would call a grudge purchase if you're referring to insurance. However, with the tough conditions, the tough economic conditions, you do notice that in the retail mass segment of our business, that's the entry level segment of our business, they're experiencing a more harsher impact of the tough times that they're operating under in terms of the economic challenges. And there we're seeing what we talk about when we refer to persistency. We're seeing that persistency levels at that market segment, particularly the long duration persistency levels, seems to be under pressure. However, we've gone into a strategy where we proactively engage our clients and our customers beforehand if we see that there's a likelihood for people to lapse on their premiums, as an example, because you find that people have been paying their premiums for a long period of time and maybe they just need help for a month or three until they pick up things on their personal front. So then we go into arrangements to see if we can put other different payment mechanisms or maybe pause some of the premiums for a short period of time until they're able to afford it again. So it's all about the proactive management and engagement between us as the business and the client to see how can we look at the long term. So yes, we are feeling the pressure and seeing the pressure on our clients and our customers. However, we are just as invested in making sure that we retain customers in the long run. And as I talked earlier, we focus on making sure that we've got good quality customers that grow our business. And I suppose the investment goes both ways, where in tough times, we also proactively come to the party.
Abigail Mukhuba is the CFO and Financial Director at Sanlam Limited, talking to us there about their performance getting back to normality.